Welcome, everybody, to the NARPM podcast. Thank you so much for joining us today. We have old school friend of mine, Deb Newell. She's the owner of Real Time Consulting. She successfully exited 2 companies, and she exited Real Time Leasing and Real Time Property Services. And even though Deb looks like she's about 25, she's been in this business, in this industry longer than even I have, if people can believe that. Deb, thanks so much for gracing us with your presence.
You're so much. Thank you.
All right. So do I have to call you Dr. Deb or can I call you Deb?
You can call me Deb.
All right. But if you guys don't know her, you have to call her Dr. Deb. But if you know her like me, you can call her Deb. All right. So Deb, before we get into the latest venture that you have, PMX Marketplace, just talk about real-time consulting first. Like, talk about your journey from when you owned the PM business and your property services business, and then how that got you into real-time consulting.
Well, I started flipping homes, and that kind of led into building the maintenance company, becoming a general contractor, doing all of that. And then eventually that kind of led into accidentally, like a lot of people, falling into property management. Like, how hard can this be? Right. So I'm managing my own properties, and then people are saying, "Hey, will you help my friend manage properties?" I'm like, "Sure, it's not that hard." Right. So it kind of grew.
All we do is collect rent, Deb.
Yeah, exactly right. We just open the door, let people in, and they pay us. So I wish somebody. It's one of those things where you're like, really? Did I really know? But it really just grew organically. I did put no effort into it at all. It was all through just people I knew. I served on, I was a real estate agent. I served on the board of directors for the local association, then served on the state. And, that was probably my growth method, was like, selfishly, I was the only property manager on those boards. So that was really helpful. And,
there's a great tip for you. If you're listening right now, that's a great tip.
I know.
Your business.
It really is, actually. And it really works, because a lot of realtors don't want to do property management, as they probably shouldn't. It's not easy. And it can really get away from you if you're not careful. And nowadays it's even harder. I will say there wasn't as many rules and regulations back in the day as there is today. And I'm not even like opposed to some of them. I think they're there to give really bad landlords this, yes, it was probably built for some of the few, but it really holds us all accountable to being really good at what we do. But it also helps with the narrative to say you really should hire a professional property manager and not do this yourself. So you can argue both sides on the pros and cons of that. And that grew into, then I served on the NARPM board of directors back in 2014, and under Tony Drost, so when he was president, and served there for a couple of years. And that also built out kind of this basically it built out a platform of, you just get to know people. I was area manager or regional vice president, I should say, for 2 regions at the time, because it was structured very differently back then. And, that kind of grew into helping others and kind of teaching and coaching / really digging into people's businesses. And I'm like, I really enjoy this. I love doing it. When I was in my undergrad, my senior thing that, when I was kind of doing that, because it was in poli-sci at the time, I got to teach a poli-sci 101 class at the University of Colorado, Denver. I mean, the professor did nothing. He literally handed the class to me and said, "It's yours." It was awesome. Loved it. And it kind of grew from there on, just enjoying this education part and teaching others, which then kind of grew into me going back to school for other things and building on that, and then deciding to exit, leave Minnesota because it was really cold there, and moved to Arizona where it's a lot warmer. And I've been doing the consulting business. I started in 2013, and I had been doing the consulting. I had somebody run the other businesses, and it just kind of all the stars aligned, and without knowing that they did. And that's kind of how I ended up here today. And so really to, say, what does real-time consulting do, is that we're really a hands-on property management consulting firm. I call it, I look under the hood of the car. I go inside companies and I do what I really call forensic diagnosis of the company. from the foundation to the top. I interview the team. I review the financials line by line. I evaluate people, process, technology, and revenue. And people drive the process. Process determines what technology you need, and then when those three are aligned, the revenue follows. And so I think last year alone, I looked over. I did the calculation because I was actually curious myself. I did over 600 diagnoses of just diving in and having these conversations with companies, and I see a lot of consistent patterns when I do this. I can walk into a company now, and within 30 days I can identify where revenue is leaking, where the team is misaligned, where the technology is underutilized, and what that path forward looks like for them. And that work produces this executive summary report that I put together, and that becomes really this operating blueprint for the next 12 to 18 months for this company.
And I really like watching your journey from afar. It's been pretty amazing because originally you did a lot of consulting on the maintenance because that was like the biggest, heaviest.
And I love that too.
Well, you ran a maintenance company and you successfully exited that, right? You sold that to RealPage back. When did you sell that one?
Well, the part that I sold to RealPage was different. That was a software. So that was a SaaS product that I created for the maintenance company. And then that was actually, that was in 2014 that happened. So they no longer actually support that platform, but that RealPage at the time bought a lot of different platforms that they do it for.
You were kind of ahead. You were ahead of the curve on that, right? Not a lot of SaaS products were out there in 2015.
No, they weren't. It was very probably rough. Like I think now, and it would be a very different product and very different platform.
So I know you
back then.
So you kind of cut your teeth on consulting, just doing the maintenance stuff, and then of course that just kind of grows into all encompassing. And now you're noticing that a lot of your clients are looking at like, hey, how do I evaluate my company? Or I'm thinking about buying another property management firm, or hey, I want to maybe prepare myself for an exit, right? As us old timers get a little bit older, right? We're like, okay, we don't have anybody that wants to take it over. Like, how do I exit this? And so that was that the driver that made you create?
Well, PMX? I think a percentage of the engagements that I do in consulting, they don't always end with just like, here's how you fix your business. Some of them end with like me having to help them decide that maybe you're ready to exit. Maybe, or this owner should be acquiring, or it even could be, the company's value is significantly higher than the owner realizes. And then, of course, that leads to different discussions. Every time I do a valuation of a company, or anytime I do an engagement with a company, I'm always doing an evaluation. I want them to see where their current state is. Like, where are you at today and where are we trying to get you to? So current state versus future state. And sometimes that current state will be very indicative of how we end up into the future, whether it be more revenue, et cetera, and build on growth. And I think that helps the companies realize what they need to be focusing on in the moment. And then again, some of it may be that they're realizing that that they're in they're just tired. Maybe they just don't want to do this anymore. So it really kind of, and I do get a lot of inquiries from buyers who are always looking for property management companies to acquire. And again, some of my companies are ready to sell. And so I work as an M&A advisor really to help them position themselves to do that. But the consulting work just really kept surfacing that same structural gap. It's owners who have built real value, but then were really afraid to kind of raise their hand and say, I have something, because then it would be just flooded with like buyers who, and I think it was just overwhelming for them. So they really wanted somebody to kind of help them really structure what that deal could look like. So last year I did 7. It's consistently grown over the years. I've done them for the last 4 or 5 years, where it's just consistently grown how many I've already done 4 this year. And so it was this part, maybe it was just kind of this aha moment where I'm like, gosh, there has to be some way that I can help. Even, I have a great network, but sometimes even my network is not the right fit. And I really spend time trying to curate who I think my seller would be a good fit for a buyer. And so that's kind of where PMX entered into the picture. It's not, a lot of those engagements don't end with just how to fix the business. They just want to exit. And so when, the real-time consulting solves that diagnostic problem. It tells you what your company looks like from the inside. And I think PMX solves this market problem. It tells you what your company is worth relative to the industry and connects you with qualified buyers or sellers. I mean, I already have some plans and some iterations of where I want this platform to go for even on the buyer side. And so it's two sides of the same thesis, really. It's property management companies are real businesses with real enterprise value, and they deserve the same quality of analysis and the same, valuation and the same access to a functioning marketplace that every other professional service industry has out there. And right now, the way I kind of describe PMX is it's the Kelly Blue Book meets like a biz buy sell, which you can, there's nothing wrong with biz buy sell. You can definitely list your property there, property management company there. It's just buried in with a bunch of different industries. And maybe I'm a little biased, but I like to think that our industry is very, very different than other industries. And we have a lot of nuances that and sometimes are valued very differently. You'll hear about business brokers who are not part of industry at all, and they'll do a valuation, and they've missed the mark on so many different things because they don't understand the relationship when it comes to fee management and how we're structured internally and how we manage properties for other people. So that's a big part of it.
Yeah. So you're solving multiple problems, right? So problem number one is I own a property management firm. And I want to put it out there on the market, or I want to put it out there for sale, but I also don't want to get inundated. And I don't really know how to do that either, right? Like, one is I don't know what the valuation is. I'm not really sure. Two, I don't really know what to do to fix that to get the highest valuation. And three, I don't really know where those true buyers are. So with the PMX Marketplace, you can list your business on there, or you can just do a valuation, if I'm correct. Is that correct?
That is correct. Yep. And I've made this, that's the other thing I've done differently. This is free. So I kind of took a page from you a little bit on that, Pete, but I was like trying to, I wanted something that somebody could access in our industry and not have to pay to list. And so it was get a free evaluation. I mean, there's so much information out there on the web. You could Google, use chat, Claude, whomever, to probably get a very rough valuation of the business based on just industry metrics that are out there today. There's really I don't know if there's a lot of secrets when it comes to that. But I can tell you every buyer that I've ever worked with will value a company very differently. I can take 5 buyers for one company and they'll all come up with a very different amount. And it's really just because it's what they're looking at and what's important to them on what they know that they're absorbing and how it fits into their current portfolio or model. And that's okay. What I do is I give a range. When I'm even working with a client on the consulting side, I always give them a range saying, hey, you're going to fall between this and this. Somebody's going to buy you between these amounts. And it's either an EBITDA, valuation. So there's different methodologies I use, right? So it's EBITDA, it will be SDE, so seller's discretionary earnings. It will be top line, it will be per door. I try to give them a couple of different valuations, but in part, it's going to be dependent on the size of the company. That plays a factor into it, the type of portfolio, the market, where they're located, all of that. So really
what I'm hearing is, so based on how big of a company I have now, is that based on revenue? Is that based on door count typically?
It's going to be based on both. So I think here's a good example. So if you have a company that's 200 doors or 300 doors, I'm probably not going to give you an EBITDA valuation. It doesn't make sense. It's actually going to come in a little bit lower. It's probably not going to feel great when I tell you that number. And you're going to be like, but because keep in mind, the psyche of this is more of an emotional transaction. When I have a smaller company, it's a little bit more emotional, right? This was my baby. I grew it organically. I curated these people that work for me. Like, I'm protective of all of this, and every dollar counts. And the bigger companies will do valuations on EBITDA because that's their operating model. Essentially, that's how they're valued because they're larger. So they may give you an EBITDA valuation, but it may not really play into the overall true value of what that company has built and futuristically what it could be worth in as you build in your revenue. There's opportunities with smaller companies where they may not be capturing all the revenue a bigger company can do, and there's advantages where a bigger company has more resources that a smaller company doesn't have. So there's pros and cons. But I think but then I would say, but if you have a company of 700 doors or more, sure, let's do an EBIT evaluation. That would be one of it. You see more SDE and top line, in my personal opinion, under the 700 door mark than I would see EBITDA. But it doesn't mean that somebody won't present an EBITDA evaluation. It's just, I would want to see it weighted against the others. And then that average might make more sense. Everything's negotiable. So it's, the buyer really wants that portfolio and that book of business, and that's what they're probably buying mostly, not so much the entire company. And that's the other thing. So you're structuring book of business versus the company.
Versus assets. Mm-hmm. So, all right, couple of things here. Are you seeing valuations over the last few years going up, down, or staying pretty consistent?
I see them staying. I would say they're ticking down a little, but but not a lot. I think that's really also where the market is, like the economical market today, not so much the industry. I think
the cost of money is more expensive, right? It's exactly. Almost like buying a house,
right? The dollar is not as you could almost argue to say, is our dollar strong against what we're buying, right?
And interest rates, not just interest rates for buying properties, it's just the cost of money, right? Interest rates are up. So as interest rates go up, costs come down. They got to save that money somewhere. Now, let's just say I have a 250 unit, doing, let's say close to $1 million. If I go on a PMX Marketplace, do I put that information in? Will it tell me which one of these strategies of selling, like will it say SDE is best for you, or like
it will actually, it will give you it will tell you what the best valuation, it will give you a scorecard, and that scorecard again is kind of relative to industry averages and relative to like the percentile, and so it kind of changes the conversation. It really takes it from being more subjective to objective, and it's more also moving I think my company is worth X, and it lets data really drive that, that number. So I also did this because I was working with, again, it's that emotional factor.
I lived it. Yeah, I lived it. I had a big company and I was still emotionally tied to it. So
and we think our company and we feel our company is worth this because of all that blood, sweat, and tears that we put into it. Unfortunately, there's not necessarily a dollar. I mean, there is. I don't want to say that there isn't, because there is value in what you built, but it's not the same as sometimes how we think about it. It will take that piece out of it. It's really all factual. At this point, it's here's what the data would produce. Now, it doesn't mean that might be the final, like, oh, this is it. This is all. There might be other things that you didn't share or disclose. We just do the basics. I made this very simple to say income, expenses. If you know your DLER, great. If you don't, we even have a calculator that you can go to and plug it all in to learn it and get that number. If you want to plug it back in, even better. It will just give you here based off of, it'll give you your RPU, your PPU. So revenue per unit,
profit per unit.
exactly. So it's going to give you the scorecard based on where you sit. Oh, you're strong. Your door count's kind of low, and your RPU is really low, or vice versa. Your RPU is really high, and they're like, "This is great," and so it'll be like green. So it's kind of like, again, I kept it simple. It's a little bit like a stoplight: red,
Red light,
yellow,
red,
green.
yellow, green.
Yeah. So just to kind of say, this is where you sit at a glance, and then this is the weighted value based on these valuations, and it it just it makes it as easy as possible,
And
and
the reason
that
why the range in what the valuation is because you're actually taking all those different methodologies and kind of plugging them out
yes,
there. And then, so on the low end, it might be the SDE is low on this end and the EBITDA might be high on this end. And that's kind of the
right.
range.
But but there's still going to be information we don't know, and that's okay. So that's when people go, well, I think that's wrong. Well, it might be, it's only going to be as right as the data you entered in. So then we have to go back and look at what did you enter. If your expenses were super high and you didn't take, you may want to eliminate. So it kind of walks you
Right,
through
because
that as
you might be
well.
running a lot of stuff personally through your business, especially if
Yes,
you're a smaller business with no partners. You got to take that
right.
out, right? So you have to have my what does my accountant always say? You have to have the P&L,
Yeah.
and you have to have the true P&L, which is like one you give to the attorney, and then you have the one with you put all your stuff in there, right?
So it's going to ask you your door count. It's going to ask your asset mix. It's going to say what's your primary geographical location. What's your total
Mhm.
income? Again, top line. What is your total annual expenses? What is your and then it will ask you what is your average rent per unit, which you can easily get from your software. So we actually want to calculate that into it.
Mhm.
And then it will even ask as something optional. Some people do this, they separate their ancillary revenue from their,
The management
management
fees.
fees.
Mhm.
So you can actually plug that number in as well. It will spit out your NOI, which hopefully matches pretty much what's on your P&L, your RPU, your PPU, like I told you, and then it will tell you, based on your door count, your revenues below average, or you're in the top 25% of what that looks like. And then it will even ask you what your revenue streams are, meaning, so I have like a whole list, and it will say like, it's just a check mark. And that's really for the buyer to know, oh, they only charge a management fee and a leasing fee and a late fee, and that's it. They don't,
So there's
they
lots
don't
of
even charge.
opportunity. Hmm.
Yeah. So it tells the buyer at a glance, oh my gosh, this company is like golden. It can tell me exactly, like, they don't charge for inspections or renewals or setup fees or anything. So it allows the buyer to at least kind of have some information that they would ask. It even asks you, are you a pod structure, portfolio model, department? Are you a hybrid, other? Like, it will give you this opportunity to tell you, and then it will, even if your DLER is calculated in there, but it will at least give you this average to say where you sit, not only in, based off of uh, other metrics, but also these valuation methodologies
So
will help you.
if you have a pretty decent P&L and you know most of your numbers or at least some of them, this is like a 5-minute process,
Oh, yeah.
right?
Very, very easy. And let's say you do the valuation, because the calculator is free as well. So let's say you go in there, and there's a lot of free resources. Like, we give a lot of templates out. A lot of these deals can be done, between a buyer and seller easily. It's just like we do in property management. The contract, we sign PMAs all the time. We honor the contract that was signed. We don't necessarily have to have our lawyer do one every single time. If the company's small enough and you end up trusting the buyer, I mean, the idea is that you can do this yourself. You can get a lawyer. You can get a title company. You can work on that all on your own. This is literally just a platform to connect a buyer and a seller. It's an opportunity. And I can tell you, and I'll tease you with my second iteration of this, is I'm going to have a buyer page where buyers can actually sort of pitch themselves to say, hey, we're interested in these type of companies. And so independently, a seller can go, I don't want to list, but I'd love to talk to you, and have these offline conversations. So that's
So
kind of
just
my
to kind of
second
put,
iteration.
yeah, I want to talk about what you have today for the buyers. But okay, so
Sure.
potential seller, I have this awesome data and I have a bunch of resources. Now,
Yep.
let's just say if I do want to post my property management firm for sale, my information, is it public at that point, or like how
No.
does, okay, so how does
So that's what I was going to tell you. So if you do the calculator, you can literally say, now, do you want to post your listing? And it will walk you through the listing. It won't list who you are. It will list basic information, your location. It will list the what
the
any buyer
revenue?
would ask right away, right? Yeah, your
Mhm.
revenue and stuff. And it will share with them. If you want to put in an asking price, you can. You don't have to. Some will not disclose that. It will share, like at a glance, you'll see right away locate the property management company location, how many doors, what the revenue is, and if there's an asking price. And if you're interested, you can go into it. You can literally write up this flowery thing about you and like give your description. We started in this, we started with this. We generate this much. You can give as much detail as you want. And again, don't even have to disclose the name of the company. Everything is confidential. You can say what your average rent is, your total expenses. You dig in a little bit more, when you started,
Okay.
if you're part of a franchise, what software you use, how many stateside employees you have, how many remote employees you have. And then it will pull in demographic information based on your location. So we actually have that fed in. So it will tell us what the median household is, the state population, the median age for that area. It will go in it will like really dig in. And then it will give financial benchmarks for that property management business. This is all the information the buyer sees. If they're interested, they literally can fill out their information. It messages the seller, all confidential. So you can communicate back and forth with still never revealing who you are until you feel like you want to have that like discussion. Then I think we do this weekly. We ping the seller to say, basically we email saying, hey, how's your listing going? Are you under an LOI yet? And if they say yes, they can go into their listing and say under LOI. They can even say, hey, I'm accepting all LOIs with a deadline of, the 20th. And then they can put that in and that will show up right away. So people know, wow, I'm super interested. I got to get my LOI in.
All right, let's talk real quickly about the buyer side journey. So obviously
Okay.
version 2, they're going to be able to put their stuff out there to say, hey, we're in the market. So what do they do today? Is it just like a kind of like almost like VPN where they just log on and they just see a list of
Yes. And
companies?
then they can also say, I'm interested in the Southeast market. And so they can input their information in and say what markets they're interested in. And then they will get notified the minute a listing populates with that market, in that market.
Got it. I know people are going to ask, so I'll ask. This is a great tool that you're giving for the industry. I'm a big believer in niche, creating industries for niche markets. That's what VPN does, right? We basically are niched in property management, and so it costs time, effort, money for you to build all this stuff. We got to ask what's in it for you. Like how do you benefit from?
Well, I think
PMX?
what did I say? What did I say at the beginning of this call when I talked about how I grew my property management business? What did I join? I joined the local boards, and because I was the only one. Here's the thing: I did this probably because I'm not kidding. I get inundated with buyers weekly, and that's great. I New buyers, like people who come, who've raised a lot of capital, who are like, we have this money, help us find a company. Problem is they just don't have a lot of sellers. Like that's not, a lot of people don't want to sell. Some people don't know they want to sell. And so there is nothing out there today just for property management companies. And that's that I knew of, that I would be able to have it available. And I will say I'm kind of the mindset of you give a little, it comes back. So this is sort of like, it was a passion project that's turned into something super fun for me. And yes, if people are like, I just want to know what they do their valuation. Let's say they're like, yeah, I'm so not happy with that. Or I see a lot of these opportunities that are clearly here. We have like we're going to have like resources out. Then if they're interested, sure, they can contact me. Like we're a partner, Real-Time Consulting Services. Yeah, we're an affiliate to PMX, right? This is two separate companies. This is not part of the consulting company. And I do have people employed on the PMX side. So yes, there is a cost incurred, but it's also an opportunity for me to help those who want to just do consulting. I'm here, but I'm also happy of other people who are coaches or anything. If they want to be a partner and affiliate, they can. I'm not necessarily the right fit for everybody, and I know that, and that's okay. There's other people out there that might be the better fit to get them to a place where they want to be, and I'm okay with that. This is really more of it turned into something I don't know. It's been very fun. And yes, there will probably be some things eventually. I will always have it so you list for free. I don't believe in
I'll tell you this, Deb,
list.
as somebody who built a platform, what you build originally, your original design, and what you think
Yes.
the problem you're solving has morphed into something completely, it's like you have all these add-ons, and it becomes a different business than what you first envisioned.
And I'm open to that, and I'm okay with it doing that. There's all these again, it's something that I think will eventually change and get. I would love for it to get bigger, but with that will come additional costs, and then I will have to then go, what would make sense on charging for. The one thing I really want to stand behind is that I don't feel like I should pay to list. And these other sites, some of them require you to pay to list. And I don't know. That's not where I feel like the value is. I feel like the value is more maybe a buyer would, just like you would in real estate, a buyer may pay to be a part of something versus a seller.
All right, I'm going to ask one last question, but it's
Sure.
going to be a doozy. I had this conversation with a property manager just recently, and we were kind of chatting about it. And obviously, most people know that I've sold my business, and he said, like, why would you sell your business? Why wouldn't you just hire a CEO to run your business, and then you just become the owner? Do you ever run into like talking people out of selling the business because they're like, I just want to sell because I'm super busy and stressed. But is there a time when, hey, that makes sense versus selling?
Yes, I think the answer is for some owners, hiring a CEO is the right move. But I think for a majority of property management companies in this industry, it may not be. And I think that comes down to it could be a structural or financial or even a psychological reason why. Financially, I mean, again, if you're between most property management companies I would probably say fall between 200 and 800 doors. And at that scale, that margin may not support a CEO level salary on top of the existing cost structure that you already have in place. So, I mean, if you think about it, this, Pete, a competent executive leader in property management, that's going to cost me six figures, maybe even on the lower end, or maybe just touching that. So in total compensation. So a company doing, I don't know, 600,000 or maybe a million in revenue with already a 35 to 40% labor load, that could just make that decision right there. So the real question, I think, becomes, do you spend 3 to 5 more years scaling the business to a point where you can support that CEO, or do you monetize the value that you've already created and let a buyer with existing infrastructure absorb those stores and at a lower marginal cost? I think for many owners, when they really think about it, that second option is probably a better economic decision. And then I think as well, this is where the psychology part comes
where it's like
in.
when you sell, you like freedom. Like,
I think that the organizational, like, this is my organizational behavior argument on all of this. There's also a leadership transfer problem that most owners underestimate. And in organizational psychology, we talk about that founder dependence, where a company's client relationships, your vendor relationships, your team culture, that institutional knowledge are all concentrated into one person. And hiring a CEO doesn't transfer those things. It creates a parallel leadership structure that the team, the clients, and the vendors all have to learn now to trust. And that transition can take 12 to 24 months on the good end. And many of them, I hate to say it, will fail. And so what the research consistently shows is that the founder-led businesses experience the highest risk of value erosion, not when a founder exits, but I think when the founder stays in a diminished role. And so the owner who hires a CEO but cannot actually let go, no names aside, like not naming anybody, right? Who is still answering calls from their top owners, who is still intervening on like maintenance decisions or and overriding that new leader, that dynamic destroys more value than a clean sale ever would.
So Deb, we're up against the time here. So
Sure.
give us the website again.
It's pmxmarketplace.com.
pmxmarketplace.com. And if somebody is interested to, talk to you about your consulting services, what's the best way to get in touch with you?
So they can go to propertymanagementconsulting.com.
propertymanagementconsulting.com.
Yeah.
And if you're not a member of NARPM, go to narpm.org.